Hello everyone. For most of you who are going to be watching this video, it's currently in the new year. So I'm recording this on New Year's Eve, but really quickly before I jump into today's video, I just want to say happy holidays. I hope your Christmas went really well. I hope you're kicking off into the new year. Maybe you wrote down a goal, and I just want to say I really hope you accomplish all the things you want to in the new year, and of course enjoy time with your family and have a good time overall. Now, let's get into today's video. Two of the most common questions I receive when talking to people about financial planning is first, do I need a financial planner? And secondly, is a financial planner really worth it? While I don't feel comfortable necessarily giving a one-size-fits-all definitive answer to those questions, I have thought and pondered it quite a bit, and I've come to an answer that will apply, I think, to the most people, the vast majority of people on Earth. And that is, for the vast majority of people on Earth, yes, you do need a financial planner in 2026 and moving forward with your life. And also for the second question, in terms of is a financial planner really worth it? Obviously, it's going to depend on the quality of the person and the financial planning firm, but yes, I do believe a financial planner can be incredibly worth it. Now, I've brought up both of these ideas, but I think it's important to kind of note on my biases and touch on my biases and where I'm coming from in this. I'm somebody who is currently in a track at a university and currently going through my process to actually become a certified financial planner. I've taken coursework that's went over employee benefits, income taxes, investments, and all subject matters that really kind of encompass what it is that financial planning is. And in today's day and age, we're talking about financial planning not just as something for necessarily the elite wealthy, though there are firms that specifically only go after trying to maintain financial planning in the wealthy, but also trying to make it apply to everyone. Currently, when we talk about everyone, we kind of look at the average investor. That definition of average investor has changed significantly over time. And now, with the rise in employee stock opportunities and the rise in retirement accounts offered by workers and by the workforce, you're starting to see that the average investor, so to say, is just the average working adult who has access to one of these workplace plans or anything like that. Currently, over 62% of the United States, where I'm from, has some level of stock investments. A lot of them primarily just through work, and they may just only have that one thing. What I've kind of found talking to people is there's a little bit of a misconception behind what financial planners actually do, at least the high quality ones. People tend to think of them as these people that only look after investments, but after going through the coursework and kind of learning a deeper understanding of financial planning myself, it encompasses a lot more than that. Sure, there is managing the investments portion, but there's also the common sense things that a lot of people simply don't have the time to do or don't have the time to do on par with what you'd get at a financial planning firm. These can include budgeting or planning for a kid's college, planning for retirement, looking in terms of insurance options and understanding what it is you actually need and navigating those complex markets, and tax loss harvesting, coming up with tax advantage strategies. It can really encompass a lot of things as long as you have a financial planner worth their salt. So, overall, to be completely and honestly fair, it's not that every single person on the planet needs a financial planner. Why do I say that? Well, it's not necessarily neuroscience. You're not trying to take on becoming your own surgeon per se. I'd say financial planning as a subject matter isn't overly complex. It's just something that it's quite easy to do a mediocre to subpar and average job, but it's really hard to master in that it requires a significant amount of research time and continued learning year after year after year to make sure you're taking advantage of all the things you have at your disposal. So, in the same sense that it's not necessarily super hard to start learning how to play a sport like basketball, there's going to be a significant difference for me, somebody who, yeah, I played a lot of years and I played at high school level, but if I went up against LeBron James, I'm getting cooked and I'm getting destroyed brutally, 21 zip getting crushed. So you can definitely do it, but it's just not going to be feasible for a lot of people to kind of have their financial planning on par with what they would want. These are some of the factors that kind of lead me to say that the average investor at this point isn't super knowledgeable about investing specifically or financial planning in general. Why do I feel comfortable saying that? Well, because we live in a very, very privileged country that allows us to kind of specialize into these niche areas we want to in order to kind of do the best thing for us. Now, sometimes there is a little bit of emphasis on trying to be a jack of all trades that I think kind of necessarily doesn't work as well in a country like ours. But for the most part, most people are going into their one field they decided either in college or they skipped college and went into trade school or whatever the path may be. They're going into their one field where they're going to be working in either that field or adjacent fields and becoming very, very specialized at it. And we don't expect those people to necessarily become their own dentists, become their own doctors, become their own car mechanics. Sure, you might be able to pick up some skills in each of these areas, but it doesn't necessarily mean you're going to be batting on par with professionals in that sense. A lot of the average adults I talk to don't even hardly know what it is they're invested in. They pick between their standard options in their 401ks or whatever retirement plan they're offered through their workforce, and a lot of these options tend to kind of suck depending on where the company's working with. Yes, it's certainly better than having absolutely no investments whatsoever, but a lot of them are just simply in target date funds that completely misunderstand how much risk you should be taking on and where the eventual payoff will lead. And other options may include really bad mutual funds that maybe the company they're working for gets a commission on based on how many of the people are invested in those mutual funds and what size the total pool of the money in those mutual funds actually are. Overall, I'd say a lot of people end up kind of becoming their own worst problems with their portfolio specifically and their financial plans. They may have these goals and find that their portfolios don't align, their spending habits don't align, their planning doesn't align with any of the goals they actually have. This is where I think a high quality financial planner that again is high quality and worth their salt can really step up and help their portfolio and can help them kind of bridge the gap, so to say, between these end goals and what they're actually doing with their money now and where their planning is actually going. Now, in terms of addressing specifically the first question of, do I need a financial planner? Well, it's a little bit, again, it's a little bit hard to kind of do a one size fits all. I've said the vast majority of people will actually need a financial planner, and I discussed how they can kind of get in their own ways. But what are some surefire signs to identify if you need a financial planner? Well, I think the most important thing you can do is ask more inward reflectioning or more reflection based questions that'll help you really identify whether or not it is you need a financial planner. For instance, a really good question could be, how much do I actually know about the topics that I'm trying to kind of master and become good at, and good enough that I can support my family in the future, achieve retirement at the age I want to, send my kids to college, whatever it is. How on top of it am I? Do I know how much I need to be allocating per month? Is that something that if I'm starting to try and think about that, that I would even know how to go about doing that? You're going to have a lot of questions when you're faced with these, and they can be really easy to just blow off, which is why I think it's really important to understand what you do know at a deep level, and more importantly, understand what it is you don't know at a deep level. For most people, they aren't going to be able to necessarily handle these situations, and cause significant amounts of headaches, may cause arguments with spouses, whatever. The point being, there are going to be difficult challenges that you need to try and prioritize and handle, and not everyone is capable of doing that. And they really don't have to be. That's kind of the entire point of a financial planner. Now, if you have just the most basic setup and you have very little needs and you don't have anything to necessarily worry about, then sure, maybe you would be better off without a financial planner. But a lot of people, that it It's significantly smaller of an amount of people that wouldn't benefit by some measure of financial planning than those who would. Now, let's move on to the second question. Is a financial planner worth it? This is where I see the most holdups and snags in these discussions I have with people about financial planners and whether or not they're worth the fee or commission. Right away, as I just mentioned, there are two main pay structures. And for me personally, if I were trying to weed out as many of the bad options for financial planners and try and leave a pool that's big enough that I can actually search inside, but still high quality, I would be focusing towards fee only. And that's typically where I see the people having problems, is they'll bring up, is 1% really worth it every single year based on how much money the financial planner is managing? And I'd like to kind of handle this question from a different perspective that I think a lot of people don't necessarily look at. Will the services of a financial planner benefit you greater than the 1% fee? Again, this is a question that's different for different people, but for some people, it absolutely will and more. I've done a considerable amount of research trying to identify what the average annual return of what we would consider at this point the average investor is. And while it's hard to find a definitive study or a definitive solution or a definitive even report on this, we can kind of get into a range that typically discusses around a 4% to a 7% average annual return for the average. Again, if you take everybody in the United States in the workforce who has some allocation into investments, that is typically the range that you are going to see as their average annual return. For a little bit of context, I think it's important to bring this up, the average annual return of the S&P 500 over the past 20 years has been 11%. So the average annual investment at best for, again, your average investor is going to be 4% less already than the S&P 500 alone. And at the worst end of the spectrum, it's going to be about 7% higher. Now, when we kind of look at this as to what type of investment portfolio you would want and how much risk you would take, what we find is that a lot of people are very, very risk adverse. This is not necessarily a good idea for the vast majority of people. For the vast majority of people, they take on exponentially less risk than they really should. Why? Because they don't actually understand the nuances of investing and how the stock market works. And again, as I've mentioned before, there's not really a need to. You just need to try and come to terms with the fact that you may not understand as much about the world as you may think. And I think that is a perspective in life will carry you significantly farther than just trying to pretend you know everything. So for a lot of people, they take the idea of losing money as the worst thing ever. And that's why they lock themselves in to very low risk mutual funds or target date funds that significantly underperform the market in the long term when they'd actually be significantly better off taking on that risk, especially because a lot of them, they can afford to take on that risk and they arguably should be taking on the risk, but they just won't. With a financial planner, you're going to have people who have spent years studying into this subject matter, trying to figure out, okay, how much risk ideally should my client take on? And they'll actually try and communicate this with you, and they may get you out of the 4% per year forever cycle into actual investments that align better with your long-term goals with building your wealth. Now, I've talked a little bit about fees. Why do I like fees so much? It's all about incentives. When we talk about fees versus commissions and what signifies a good financial planner, you really just have to go back to incentives. With commissions, the incentives are how can I pick up new clients initially, and then how can I sell them products? There's not so much emphasis on maintaining happiness with your clients or trying to grow your client's portfolio. It's all about selling products. With fees and this 1% fee, which is pretty much the gold standard in financial planning right now, you're trying to align incentives. Why? Well, for fee-based firms, They get money initially, right, by taking on more clients. So there is still a little bit of a salesy aspect. But they have to satisfy those clients so they stay on so they continue to get their fee. And better yet, that fee, they actually get higher and higher figures if they can grow the value of your account. So, all in all, the fee versus commission argument, and why I find it kind of weird that people get locked into this idea of fees, is it aligns the incentives better. Additionally, a financial planner is not solely about investments. I know I talk a lot about investments because that's what I'm really passionate about. But as I brought up earlier, they're trying to find tax advantage strategies. That right there is eating into the 1% of the fee, right? They're trying to make up that 1% fee to you and more. They're trying to benefit you so that you are happy and continue with their services. So, how would I go about trying to find these high quality financial planning firms and really get a better understanding of if a financial planner is a good fit for me? Well, one of the incredible things I like is that a lot of business news websites will actually put out their own rankings. So I would start with someone like CNBC that puts out their top 100 annual financial advising firms list. From there, what I would look for is I would look for firms that have a team of CFPs, importantly, and maybe additionally some CFAs. Now, I won't put too much emphasis on the CFAs. That's a little bit of a like pick me being picky, knowing more about the industry. But honestly, a good team of CFPs would be more than sufficient for financial planning. Now, I bring up CFPs. Why do I bring up CFPs? Well, the CFP designation requires people to undergo coursework relevant to actually financial planning. Like in my instance, I'm going through a track where my classes actually are accredited by the CFP organization and will go towards the education credits for the CFP. And then additionally, they have to study for and take a test in order to get their CFP. And it's not necessarily a hard test. I think if you've actually done the education that you're supposed to, you're going to be quite ready to kind of study a bit and take on this test. It doesn't have like the lowest pass rate ever. It's not a CFA, but it's a designation that these people have actually put in the time and effort to obtain the CFP, which is really important in this space. Additionally, they basically sign up to do continuing education and keep up to date with new advancements so that they can benefit their clients. They have a specific set number of hours they have to hit annually of this continuing education experience. And lastly, and I think most important, they're held to a fiduciary duty by the CFP so they don't lose this designation. If they're doing a bunch of shady stuff to their clients can actually contact the CFP organization and they can get the designation actually removed from this financial advisor that's doing all the shady stuff. It kind of acts as a check and balance in that you get benefited greatly by having a CFP and proving that you've gone through this process to become certified in this, but also you're held to a significantly higher standard than other advisors who don't go through the CFP process. So that's something I would look for. Now, as I have discussed earlier with actually going out and paying a financial planner, it's going to be kind of difficult for the majority of people because, well, you don't know what you don't know. You won't necessarily know until you sit down and talk with a real professional whether or not you're your own worst enemy for your financial plan and for your financial future. But I think talking to anyone worth their salt, basically what's going to happen. At this point, financial planning, again, I said it wasn't the most hard process in the world, but there are two major software companies that do a very fantastic job of financial planning. And depending on the firm, you're going to end up with either of those. They both kind of operate similarly. There are some slight differences for the actual planners trying to utilize them, but they aren't different enough to start doing a compare and contrast. They do a very, very similar thing. But basically, they'll have you fill out a questionnaire with them that will then be able to run Monte Carlo simulations or thousands and thousands of simulations and try and figure out at what percentage rate you're hitting your financial goals with your current financial situations. And then the incredible thing about this software is it'll actually recommend you changes based on that. Now, The fun thing about these softwares is they're very, very expensive. It's not like you couldn't necessarily go out and get Money Guide Pro or eMoney and start using it yourself. It's just the 1% fee for a lot of people. It's basically going to cover the annual expense of if you wanted to go about financial planning on your own. Now, for some people, it may be worth it to try and skip a financial planner because some of them, as I've mentioned, like every job, you do have your rotten apples in financial planning that are just in it to sell you stuff and make money for themselves and don't really care at all about their clients. But basically, your 1% fee could actually just basically be the cost of an annual subscription to one of these financial planning services. And at that point, I'd much rather have somebody with a CFP who's gone through years of education in this space, and it's literally their job to find out all of the things you can be taking, all the things you can be doing in your advantage, keeping up with literature, keeping up with legislature, and kind of keeping up with those changes versus you who probably already has a full-time job in a different industry or an adjacent industry or whatever. So overall, these are some of the factors of why I'm very pro getting a financial planner. Again, it's not a one size fits all thing, but in this day and age when we consider who the average investor is, it's a one size fits most all in essence. So overall, I hope you enjoyed the video. Thank you for letting me kind of talk and delve into the subject matter of financial planning. If you enjoyed the video, I'm more than happy to cover more financial planning topics in the future as I try and cover a wide variety of things in finance and economics. So overall, thank you very much for checking out today's video, and I really appreciate your time.